Good morning, Manus. Not only is it set to top last year's level, but this might be the deepest job cuts for lenders we've seen since 2015. More than 60,000 so far have been planned. And this is because banks are trying to save costs. They have piling loan losses. There's regulation they need to deal with, and they're spending a lot more on technology. But the thing is when you dig into these numbers, the cuts are really present in Europe. About 78% of these job cuts are coming from European-based lenders. The majority of which is HSBC. 35,000 jobs they announced they were going to cut in February. And let's not forget the human cost of this is going to be really difficult for unemployed bankers. Data we've seen from various recruiters shows that listings here in London have fallen by about 50% year over year. So for those who are getting cut by these banks, again, especially those in Europe, are going to struggle to find new jobs.
Dani, quickly, 1 minute left in the show. You, Manus, and I have been talking this entire week about the challenges the banks are facing. JP Morgan, no more Ubers.
That's right. Well, if you want to go into the office and get that creative combustion, JP Morgan isn't going to pay for their junior bankers to do that. But Anne-Marie, you and I were talking about how banks, they're just not on the same page. We have that on one hand. On the other hand, we have Deutsche Bank telling their New York City employees they don't have to come into the office until mid-2021.